Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Wednesday, and we are now at the 26th of January, 2022, 6:15 p.m. Central Time. So, Fed Day, and what the Fed did is reasserted what it's been saying, but it did clarify a few things. Number one, the main tool is going to be interest rates. Yes, there'll be a runoff of the balance sheet, but that is not going to be the main tool, and many traders have been looking for that. Number two, it did not sound as though the Fed is going to jump by a half a point and then give you a quarter point and every rate hike will be there. It's going to be well telegraphed. It's going to be orchestrated. And the Fed's goal is very clear. They labeled what it is, and they're trying to engineer something of a soft landing. They continue to say that they think inflation will abate once the supply chains get back to normal. I agree with that. All right. So when interest rates are going up, well, the dollar's going to go up too, but you don't know what the Fed would say today. I had traders actually in the dollar index, and I always tell them to come out in front of a Fed meeting, and they did it today. So they did fine. I'm not worried about it. We'll take another look. But that pressure of the rising dollar and rising interest rates, well, that's not the thing that's good for the gold market or necessarily the silver. So you saw that falling back, the copper too. Metals don't like really sharply rising interest rates. The idea there, if they're not engineered right, the economy slows down. Think of it that way. So the combination, the Fed's going to fight the interest rate, use interest rates to fight inflation, weighs on the metal markets. In the bonds and the notes, well, it's still an all-go signal. Everything wants to move up there. And for the same headwinds that the metals have, well, you're up in the energies to have a problem. Now, in the energies and the gold, you got to think this too. The United States today delivered its written response to Russia. We'll now find out, because Vladimir Putin by now has heard NATO is not going to give in to certain demands. They might give in to war games and not putting missiles in the Ukraine and other areas. I can understand that. That would make all the sense. I wouldn't want missiles in Canada aimed at us, or Mexico or Cuba. I get that. But there's a but. If they wanted to join into alliances with the United States, who's he to say that? Who's he to say that the Ukraine can't join into a NATO alliance just because they're on the border? They're an independent state. That is where the rub is going to come. We'll see how he decides to play that over the next couple of days. As the weather starts getting warmer, there's more sunlight every day, I think he's going to decide to make his move. While we're getting a relief bounce right now in stock indices, we'll see how that holds up by tomorrow. As you know, they gave up all the rally during the day as soon as the Fed started talking. On the weekly chart of closes for gold, you still have an upside bias. In fact, you keep it unless you get down to 1803, which is about $14 lower than this. When we take a look at the action today, you stepped out of an uptrend. Prior to the action here, this is what you looked like. You had the pattern of higher lows, higher highs as measured by the swing line. Swing lines are available on the charting products my company gives you. I wrote this indicator, and it helps me at least, and I can teach. If you got a 13, 14-year-old, I can teach them how to tell you what the trend is in a market and what the risk is in just a very short, maybe an hour. It's not hard. They're going to be better at it than you because they love games, and it's based on game in a way. But you got now a higher high, lower low, so the market has stepped out of its trend. The market is pulled back again to the 18-day average of closes. If that gives ground, you have the 200-day right under it, as you can see here, and in the green you have the 100-day. To get to the Bollinger Band, another level of support, you got to go all the way down to 1786.90. Well, it can happen, of course. What would make it occur becomes the bigger question. The most likely occurrence is that Russia and the U.S. and NATO don't get along. But if all of a sudden everybody backed off from there, that's not going to be bullish the gold market. So you got to think that way too. And gold is still looking at inflation, of course. When we look at the slow stochastics, they have turned down. So if we take a look at the slow stochastic study, they weren't embedded. Embedded really means that the blue and the red lines, they're called a K and a D line, are going sideways over 80 for several days or more. The first day both were going sideways was Monday. Then Tuesday, this is January 25th, both were over 80. Today was the day it had to do it to have several days or more. It failed. So you have an overbought market that's already back to a neutral zone. That's what I'm calling gold, neutral right here. The gold-silver ratio, you've been seeing silver lose to the gold. The higher the number goes, the more ounces of silver you need to put up to get 1 ounce of gold. And when it goes up, it's not bullish silver. So you're stalled. Silver's been in a correction, but an overall bullish bias because you're staying over the 18-day average. I got what I was looking for. If you take a look, see the red line, the 18-day average, and the green, the 100? Watch them. I told you I thought that we were going to get a bullish crossover soon. You got it right now. So that is where the support of the market lies. Often when you get a bullish crossover, if the market were in an uptrend, I'd say it's going to make a new high. What it does is it offers an awful lot of support. Now you're going to get the moving average theorist jumping into the market saying, I've got the 18-day over the 100. The 100 is over the 200. No, the 200's up there. It's really just a short-term crossover that could kick the market through these highs and eventually challenge that 2470 because of it, but we have to see how it holds. Right now, it's no more than support, trend down, bias up, momentum pointing down. There's really nothing in the silver, even with that crossover. In the copper market, you have higher lows. You're trying to make lower highs, and where are you fighting a battle? I have been pointing this out for a month. You're stuck at the 18-day average of closes. And I expect it to stay in that zone, if you will, until the lunar holiday, which starts this coming Monday, goes for a full week in China, until that comes to an end. When that comes to an end, business is normal. I don't expect a lot of copper business done out of China until then. I am of the belief that platinum and palladium have been rallying because I think the car industry is going to do better. I think they're already looking at catalytic converter needs. Remember, platinum and palladium, diesel and gasoline, use these converters. You've come up, the trend is up, you hit the Bollinger Band each time. What are the odds of staying over that band? 5% of the time. And if you've taken my enhanced Bollinger Band course, you'll learn that. Now, before I get into the palladium, I put up the 200-day average. I want to remind you that tomorrow, I'm going to be holding my live webinar. If you didn't get an invite, it means you're not on my mailing list. Just take your cursor, move it up to the top right here, right now. Icon will appear. With that icon, just click on it, fill out the form. You'll get all that you need to attend. I will open the chat room up at 12:15 p.m. Central Time. I start at 12:30 sharply. And I guess sharp is the right word, sharp. And we'll finish up at 12:50 approximately. So it's 20 minutes long. I do not post it on the website. You either attend it or you miss it. It's really that simple. You work out your schedule. Where do you think I was looking for this market to fail? My paid subscribers heard me saying this for a long time. It's almost like cotton. I picked the cotton off of the same type of number when it was above the market in the Bollinger Band, and the same in this market. That's what I was looking for. I am not bearish. I am bullish. You're embedded now. So with an embedded reading, given breaks back under the Bollinger Band, I'll get fairly excited and looking for opportunities if I were you. I want to remind you that, again, the dollar getting the bid. You can see it. Target 96.67. As the dollar goes up, it weighs on prices of goods priced in dollars. So that's something else you got to think about. What's it going to do for the soft markets in the morning? Other things like that. Always extrapolate all the way through. Again, I hope to see all of you tomorrow in our live webinar. You can join it via desktop, anything that you've got. It's fast. 20 minutes of your questions. Answer them like that. Write me. You can either go to www.iraepstein.com and you'll see areas to write us and or sign up for the course, and there's my email address in there. Write me the questions you have, let me prepare the charts, and we'll rip through them in the morning. So I'll see you all tomorrow, I hope, at 12:15. You have a good day.